Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to be giving you what I think is the best opportunity for options trading in the healthcare sector. I'm going to start off by giving you some basic technicals, a few fundamentals, all in which can be used in order for you to make a decision on what option strategy you're going to use for this stock. I'm going to also go ahead and show you, most importantly, how to use this stock in order for you to grow a small account portfolio and how to use this stock to make consistent income by trading options. Now, if you're new to options trading or you're trying to use options in order to grow a small account portfolio, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to show you what I think is the best opportunity for options trading, a literal gold mine when it comes to the healthcare sector. For today's video, we're going to be featuring none other than Novo Nordisk, and that ticker is going to be NVO. For those of you that know, and for those of you that may not know, Novo Nordisk is one of those healthcare stocks that has been beaten down. The healthcare sector is in turmoil right now, and I think there's lots of opportunity. There's lots of opportunity across the board in healthcare, but like I mentioned earlier, I think this one is the best opportunity right now, and you're going to see that as the video goes further. Now, for those of you guys new to the channel, I would like you guys to know on this channel, I specialize in trying to help grow small accounts portfolio in order for that portfolio to eventually be able to make consistent income over time. Now, before we go ahead and jump into this video, I want you guys to do yourself two favors. Favor number one, always make sure to do your own due diligence before investing. What may work for my portfolio, quite frankly, may not work for yours. Favor number two, always make sure to have an exit strategy. That way, if the trade do decide to go against you, at least you know how to get out of the trade. Now, all I require from you guys is a like in the bottom and also go ahead and subscribe to the channel for more videos of this nature. Now, Novo Nordisk. Firstly, we're going to go ahead and jump into the advanced feature right here in order for us to open up the chart on Novo, where I'm going to give you some basic technicals. Now we're going to go over and scroll over to the 1Y, which is representative of 1 year, for us to see how the chart is. Now, my two main indicators I use in order to make a decision on what options trade to make is always going to be the MA200 or the 200-day moving average, which gives you a estimate of where the share price was trading for the last 6 months, which is representative of this blue line right here, and also the relative strength index or RSI, which is this line all the way down here. Now let's start off with the 200-day moving average. As you can see to the top left here, the current price of Novo Nordisk is $50.84. Keep that in mind. That's going to be very important when we go ahead and do the option strategy. Now, currently, that price of $50.84 is trading way below the 200-day moving average. The 200-day moving average is around the $80 mark. So the difference between the 200-day moving average price and the current price is going to be around a $30 spread. So, in my opinion, I think that creates a very good opportunity. Now we're going to go ahead and go down to the RSI before we come back up to the chart right here. Now the RSI stands for Relative Strength Index, and it's what's known as a momentum indicator. What it does, it actually gives us information on whether a stock is overbought or oversold. Now, oversold territory is going to be going downwards, anything towards the 30 mark. As you can see, 30 right here. Anything going towards that tells you the stock has been oversold. Currently, Novo is trading at around 37-ish RSI. So it's almost very close to the bottom of the oversold territory. So that right there for me right now is also what I would consider a green flag. Now, we're going to go ahead and look for a clear level of support. So if we go right here, we draw this line right here, we're going to see right here is a very good level of support at the 49.61, let's say the $50 range. Now what we're going to do, it's a support, yes, but it's not a very strong support. So what we're going to do, we're going to go to the 5-year chart, and see if that helps us out. Once again, I'm going to put a line right there. And there you have it. You see the $50 mark right there. If you look left, you're going to see how many times that this chart has touched this line. So the $50 price gives us an indication that's an extremely strong support. Now, let's go ahead and go into the actual stock so I can give you some basic fundamentals of the stock. So now we're going to go ahead and we're going to scroll down. Before we do that, let me show you how beaten down this stock has been. As of the year to date, this stock is down around 42%, which is drastic. But remember, when there is blood in the water, that's the time for you to strike. So let's go ahead and go down to give you some basic fundamentals. So we're going to start off with the key statistics. So currently, the 52-week low on Novo Nordisk is $45.05. As you saw from the share price is way closer to the 52-week low. So can the share price still go down? Absolutely yes. Is there a high likelihood of it going more up than down? Yes. Now, the 52-week high. The 52-week high is $139.74. The 52 high represents a 3 times the price of what the stock is trading at right now. So, just by the 52-week high and the 52-week low, you can see, you could decipher for yourself that Novo Nordisk has an way better upside than it does a downside. Now, for those of you who'd like to buy stocks and hold them in your portfolio, if you do decide to go ahead and buy Novo Nordisk, then it pays a very decent dividend of 2.37%. Now, that's a very decent dividend. Anything 1.5 to above 3% or 5% is a decent dividend. That's if you decide to buy the stock outright. So, what am I doing personally? So, for that, let's go ahead and get into trade NVO options down to the bottom here. Now, right here is the options chain. Now, like I said, if you do decide to go ahead and buy Novo Nordisk outright and you're going to pay full price for this and you want to buy 100 shares in order to do option, it's going to cost you $50.96. So 100 shares would run you around $5,100. If you do decide to go that route, prepare to hold the stock for 3 to 5 years. You will see some really good returns. Now, me personally, I don't really like holding stocks in my portfolio. I prefer the options route. So this is what I would be doing. I will be going to buy, I will be going to call, and now I'm going to go ahead and choose my strike date. The strike date I'm going to go ahead and choose for this option is going to be September 18th, 2026, and that gives me 401 days to expiration. Let's go ahead and select that. This is going to be known as a leaps option. The best time to pick up a leaps option is when a good stock, make sure it's a good stock, has been beaten down and you see there's a lot of value with the company. The other best time to get it is not on the way down. You can have some patience and wait until the stock shows clear signs it's going to go back up. Then you could go ahead and jump into the stock. But I'm just making these videos today just to show you how this is done. So buy, call, very long expiration date, more than a year, which is going to give you a LEAPS option. LEAPS stands for Long-Term Equity Anticipation Securities. It is a mouthful, so we just say LEAPS. Now we're going to go ahead and choose our strike price. The strike price I will be going with is going to be below the current share price of $15.96, and the strike price I will be going with is going to be the $50 strike price. My reason for choosing the $50 strike price, as I just demonstrated, is that it gives you a very strong support. Even way back when we checked out 2021, the $50 strike price gives a very strong support. So I will be going to $50 strike price. I'm going to go ahead, I'm going to click here. And in order for me to pick up this LEAPS option on Novo, I'm going to have to pay, because this is a buy option strategy. The amount I'm going to have to pay is going to be $10, or in the real world, that's going to equate to $1,000. You simply multiply your $10 by 100 shares, which is available in every option contract, and that's going to give you $1,000. Now, why would someone want to pick up a LEAPS option as opposed to getting it outright? The major reason is going to be it's more cost effective. So like I mentioned earlier, if you were to pick up 100 shares, buy it outright, it's going to cost you $5,100. By utilizing this option strategy, you only have to pay right now $1,000 in order for you to control 100 shares. Remember, with the option strategy, you're not going to own the shares, but you will be able to control the shares. And when you buy the shares outright, you own it for life. When you buy an option, there's an expiration, there's a deadline to it. So that's the main reason why someone would go ahead and use the option strategy as opposed to buying the shares outright, basically because of the cost effectiveness of that strategy. So there you have it, investors and future investors. For me to get into Novo Nordisk right now, which I see is the best opportunity in the healthcare sector amongst United Health, amongst Merck and Company, amongst Humana, this one offers the best opportunity for options trading. Now that you have a LEAPS option in your portfolio, I did not forget, I will go ahead and show you how to make consistent income with this. The reason why I decided to highlight Novo Nordisk in the healthcare sector is because of the cost of entry is only $1,000. So anyone trading with a small account can get into this option strategy. Remember, do your own due diligence first. These videos are for entertainment and education purposes only. So now you have one leaps option. Yes, if you have one, it's a leaps. If you have multiple, it's still leaps. So now that you have one leaps option in your portfolio, I'm going to go ahead and show you how to make consistent income. So now we're going to go ahead to sell. We're going to go ahead to call. And now we're going to be doing what's known as monthly expiration dates. The reason I'm going to be doing monthly expiration date is because we have lots of time for our leaps option to expire, which is 400 days. So if we do this on a monthly basis, we should be able to do this more than 12 times per year. I will give you the exit strategy as well. So we're going to be going to September 12th, which gives us an exact 30 days to expiration. So we're going to go ahead and select that price. Now we're going to go ahead, we're going to choose our strike price. And for this sell call or covered call, we're going to choose our strike price above the current share price. Now, if you are new to options, a simple rule of thumb is to go ahead and choose a strike price that has a chance of profitability of anything 80% and above. Remember to choose this to make sure it's in line with your portfolio goal and also your risk tolerance. So I will be going with, before I do that, let me just show you guys this. Let's pretend we never see this. This is an anomaly right here, because the 98% should not be between the 83% and the 88%. And as you can see, it shows 0. So there's a glitch in the matrix somewhere. So let's ignore that for now. So the price I would be going with is going to be the $58 strike price. The reason I'm going to be going with the $58 strike price is going to be because of the chance of profit. The chance of profit it is going to give me is going to be 88%. The reason why I decided to go with such a high chance of profit because I'm doing these covered calls against a leaps option. My main goal is to make sure I keep this leaps option in my portfolio for as long as I possibly can, because the way I'm going to make the majority of my returns is through the share price appreciation, meaning whenever this share price decides to go up while I have that leaps in my portfolio, that's when I'm going to make the majority of my money. However, while I wait for that to happen, I'm going to be selling monthly covered calls in order to rake in some additional income. The additional income for the $58 strike price and the 88% chance of profit is going to be around $43. Now, $43 is not much, but $43 is a lot more you had before you actually did this option strategy. So remember that. Another way you could go ahead and check $43 is you're going to look for your ROI or your return on investment. So the amount of money you're going to be getting is $43. However, the price you paid in order for you to acquire this leaps option was $1,000. So you're simply going to go ahead, you're going to divide your $43 and you're going to divide that by your $1,000 which you paid for it, and that's going to give you a percentage return of 4.3%. Now 4.3% on a monthly basis is an extremely lucrative return, so please do not let the $43 fool you. It looks like a small amount, but it's a very high ROI. Now, exit strategy. For the covered call, you're not waiting for September 12th in order for this to expire. What you are waiting for is a percentage gain. Whenever you are up on the trade, let's say once you do this strategy, This $43 is yours to keep right away off the bat. However, when it comes close to your expiration date, the entirety of this $43 is gonna belong to you. However, what you can do, or rather what I do with my portfolio, whenever I'm up on the trade, the covered call trade, don't get the different trades confused. If I'm up on a covered call trade around 75% or more, I go ahead, I close out that trade, I lock in my investment gains, and then I go ahead and sell another covered call for further expiration date. And it's simple. You rinse, you repeat, you keep locking in your gains, and that's how you make consistent income. And that consistent income is what's going to help you grow a small account portfolio. Now, investors and future investors, for those of you who have made it to the end of the video, you guys are the real MVPs, and you guys have shown the fortitude that you guys want to learn this in order to change your lives. Now, go ahead, like the video, subscribe to the channel. Here is the most important thing. I create this free content of what I'm doing with my portfolio in order for me to help as many people as I can make income from options trading. Now, if you guys want to help out the channel, in addition to liking and subscribing to the video, go ahead and share this video with anyone you think that can benefit from its content. Together, let's help as many as we can. And as always, if you guys have any questions with Novo Nordisk stock or the option strategy that I showcased in this video today, let me know in the comments below. Now, until the next video, keep pushing your investments.